Local cement producer PPC's new vision is to more than double its business every 10 years and become a major player in Africa. However, its share price has continued to lag the FTSE JSE All Share Index, along with the JSE's Construction Materials Index, which is down nearly 50% over the past 5 years. The sector has certainly faced numerous challenges in recent years, and some of them included the slower than expected government spending on infrastructure and, of course, increased competition, including from importers. Joining us live from our studios in Cape Town to discuss the outlook for PPC is a Finweek contributor, Moxima Gama. Moxima, lovely to have you. PPC, looking at its share price performance, I think looking at it for a period of 1 year, it's down more than 20%. So what's gone wrong?
To me, it seems like PPC is still kind of recovering from the aftermath of what happened after the World Cup 2010. I think, in fact, the entire construction industry slumped, because it was really riddled with a lot of bad press, with corruption and accusations. So it looked like investors were really dumping it at any price, at any cost. So investors are still scared from that. So they are kind of nibbling, but quite wary of it. So that hasn't really brought up a lot of confidence, which has caused the share price to actually just consolidate on the downside. You mentioned the other factors, which were increased competition and some imports. And now recently, it's just been the company dynamics with the CEO departing. So it hasn't really slumped any further, but it has been consolidating sideways from all of this.
Moxima, in terms of expansion plans and ambitions, obviously PPC said they're looking at the DRC and Ethiopia. Your view on this, is this good news for the company?
I think it's actually good, excellent news. I mean, as you had mentioned, the South African market has become a bit saturated, and they are forward-thinking. They're actually involved in one project in Rwanda, which is the government's initiative known as Vision 2020, to help rebuild the capital in Kigali. So it costs about $163 million. So it's quite a huge project. Well, in terms of having to start off building. So they meant to build about 450,000 homes to just generate the economy there, which I think is a huge initiative. It is a very reputable company, and you should remember, Africa is a rough diamond, and investing at this point is kind of forward thinking in terms of having to reap the benefits in the future. So I really think this will kind of pull up the share price. They actually doing this is a good initiative that entering at this point.
Yeah. Moxima, just on a final one, of course, we've got the technical analysis chart up on screen. Yeah. For an investor's perspective, like you said, the share price has come under pressure. Is this a good time to go in? The outlook on what it's likely to do?
Well, to me, at this point, it slumped from highs at 52. So it has been kind of consolidating on the downside, and I think getting it at current prices, particularly 16 Rand 50, because if it trades above that, then it's out of its bear trend and it's confirmed at least a bullish reversal pattern. You'll be getting it. You'll be getting the cookie whilst it's hot. Above 1650, you would then see 22 and then 27. And then from there onwards, I really do believe it would start that ascending phase to complete a 100% retracement from its all-time high. So it has been knocked quite a lot, and it's reached its rock bottom, consolidated for some time. It's a perfect bottoming up pattern. To get at these levels is really getting at a steal.
Moxima, thank you so much for joining us this afternoon. Moxima Gama, of course, she's the Finweek contributor, telling us about the PPC. We're going to be shifting our focus from cement to the telecom sector, and that's coming up. We've got a panel of experts that are ready to tell us about the challenges and opportunities that this particular industry is facing.